Hello, Peter. I'm going to make you the presenter now. Really looking forward to meeting you and speaking with you. You'll see a drop-down menu here for you to share your screen and activate your mic. Wow, look at that. Oh, nice Harley, buddy.
Yeah, that's
Beautiful.
fine.
Yeah?
Yeah.
Easy rider. Huh? Easy rider.
Yeah, I don't know how easy it is, but I'm a rider.
All right. Well, thank you so much, Peter, for coming in today and being willing to, share your journey and your work. And it's really nice to meet you. So looking at your setup, looks like you use a lot of wave counts. And I'm interested in, I think your Twitter says you've been trading for about, what, 18 years?
18 years? No, more like 48 years.
Oh, like me. Oh, okay. So
Been around a
yeah.
long time.
All right. So you kind of broke into the business when I did in the 70s, right?
Yes, I did.
Okay. All right. So what was your entree into trading and the
Well,
business?
I originally went to Kent State University out in Ohio and got an MBA. I had a big, strong background in economics. I took every econ course that Kent State offered. I could have got a doctorate, but I didn't want to do any more coursework, and I was anxious to get out in the world. So I took a job as a bank credit analyst for Central National Bank in Cleveland.
Mm-hmm.
I worked there for about a year and a half, and one day a guy comes into the bank and he wants to get a loan to rebuild his burned down grain elevator. And
Interesting.
guy got interested, and he had big plans for ultimately getting a terminal elevator going on Lake Erie. And long story short, he talked me into going into business with him. As I was a kid, I remember my dad always talking to me about every time we'd go by some large business, say, this guy, I used to know him. He wanted me to go in business with him, but I didn't do it. And he with this guy, mostly in construction company. My dad was in construction.
Uh-huh.
And I said, well, if I ever get a chance, I'm going to jump on it. Well, unfortunately, or fortunately, I don't know, I jumped.
Yeah, you said I'm going to fade my father because look at what he could have had, and
Yes,
so
exactly.
that was definitely your paradigm. So you went ahead, and what happened?
And I got in the grain business and quickly got interested in the futures markets, because we own a grain elevator, and when you own a grain elevator, you have to use the futures markets.
You have to hedge.
You have to hedge, and just by coincidence, a guy called me who was trying to get my hedging business, and he asked me what was going on. I said, well, we got a country grain elevator, and we have farmers that trade kind of through us a little bit too as well. And I occasionally offer them advice because I kind of am a little bit interested in the markets. And he said, well, we're starting to expand outside of Illinois, and we're thinking about opening some branch offices, and we'd like to maybe have you be a branch office worker. Well, this was Howard Stotler that was talking to me at the time.
All right.
And so ended up, I started an office for Stotler and Company. They ultimately became the largest pure futures company in the country.
Yeah.
I was most into their technical analyst, and kind of was more of an analyst. And so obviously I was a lot more interested in that than I was the grain business. And so I kind of moved off premises with that and opened a pure futures brokerage office. I was a manager. I hired 5 or 6 other guys. And we did out in northern Ohio in old kind of territory of Waldock, if you remember Jack Waldock.
Sure, Lynn Waldock.
He was up in Sandusky, and I was in Fremont, not just down the road.
Okay.
And anyway, so I was
taking me back. I feel young right now.
Yep. Okay. Well, so anyway, that was my entree into the business, and
were you with Stotler to the end?
Unfortunately, well, I guess fortunately, I wasn't with Stotler to the end.
Okay.
The guy that was there undoing, I couldn't get along with. As a matter of fact, and so I left Stotler, and let's see, I had an office. I moved to Akron, Ohio, and I lived, which is where I was born, and I had an office in Akron, Ohio, and while I was there, you know, it was one brutal winter in 1985. I'm changing my flat tire because it's so cold, the tires get brittle, and you hit one of those many chuck holes and you get a flat tire. For the second day in a row at 20 below zero wind chill.
Grew up in Chicago. I know what you mean.
Yes. And I'm saying to myself, you know, just because you're born here, you don't have to live here. And lo and behold, the very next day, a good friend of mine who lived in Atlanta said, I have a job interview with E.F. Hutton down in Stuart, Florida. Are you interested in going with me? And I said, you better believe I am. I drove the next day down to Atlanta. I flew down to Atlanta the next day, and we drove down to Florida. And by July, I was working in Florida, and I've been here ever since.
Oh, great story. You know, I only bring up the Stotler story and their failure to edify anyone who's listening to us, because really that was handled so much smoothly because they were a clearing member.
Yes.
So they were guaranteed by the exchange. So customers were made whole, and the transition to other brokerage firms, clearing member firms, was fairly smooth. So,
right.
You know, if you have a futures account, it's much better if you're going directly to the clearing member firm rather than a non-clearing FCM, or because you have the security of the exchange behind you. So, I mean, the difference between how Stotler was handled and then a firm where there was fraud like PFG is night and day, and they were a non-guaranteed, they were a non-clearing FCM. So, you know, make sure wherever you're trading, warriors, that you do your due diligence about regulation and the return of capital, not just the return on capital. So glad you brought that up, Peter. So let's talk about your trading now. So, you know, I see where you're at now and what you use. How about the evolution of your technical analysis background?
When I first got interested in the markets, I said, well, this ought to be easy. I'm just trying to find a price here. And I've got a degree in economics, and I know that price is caused by supply and demand. Right. So all I need to do is figure out the supply and figure out the demand, and I can figure out the price.
Right.
So I was absolutely a pure fundamentalist back when I owned it was in the grain business. I go back to 1971. That was a year when there was a corn blight scare because we'd had corn blight the year before. And I had gotten all the information from the USDA. I was following the development of the disease. I knew where all the N-cytoplasm or blight-resistant seed was planted. I knew which way the winds were blowing. I knew that there was no way that we were going to have blight damage, and we were probably going to have a bumper crop of corn. So, genius that I was, I took every dime that I had and went short corn.
Right. Okay.
And because I knew that we were going to have a bumper crop of corn, and I knew that corn was going to probably be driven down to the loan price, which in those days, believe it or not, was I think $1.06. So here was corn.
Yeah, you know, Jack Schwager brought that up. You know, I posed the question of,
yes,
you know, being a technician or being a fundamentalist, and his reason for preferring technical analysis is, as a fundamentalist, despite what price is doing, the case may still be there. Okay, so if the case is still there for the fundamentalists, but technically it's a different trend, it's easier to blow out with a fundamental opinion than a technical background.
Absolutely. And I remember the day, July 17th, 1971. In spite of everything that I knew, this guy that was a plant pathologist for the University of Illinois, Malcolm Shirtleaf was his name. He walks out in the field in Illinois and he says, yep, sure enough, we got blight here.
Mm-hmm.
That's the front page of the Chicago Tribune, and corn opens limit up and wipes me out.
Yeah. Okay.
And I'm wiped out and lost more money than I ever thought I could lose, and low down. And then of course what happened was after that day,
it failed.
The high.
Yeah.
And the
Okay. All right. Now, you know
goes
what? This is
down
great.
till December.
Okay. This is great. So,
So that was when I knew I had to find another way.
Okay.
And I got into cycles.
Okay.
And that was my big thing. I read Hirsch's book, that The Mysterious Forces That Trigger Events, and I got into cycles and I became an expert at that. That was what appealed to Stotler about me, because I remember I did some seminars in November of '75. I said next April 27th, the soybean market's going to bottom on April 20th, and I did this in November, and I put it in a sealed envelope and whatever, just to prove that cycles work. And lo and behold, next April 27th, we had a major bottom on the
All right,
day.
Peter, can I ask you a question?
Sure.
Because many people have, I've blown up accounts. I think a lot of people have gone through that experience. What I'm interested in is, after something like that, and then salt in the wound, that, it turned out to be the high. How did you emotionally and psychologically recover from it? Did it take some time? Did you have to stop trading for a while? How did you handle it? Because,
Yes,
it
yes, I
does a
did.
lot. Go ahead.
Okay, yes, I did, but it wasn't terribly long after that. It was 1972. I was trading plywood, and I was a friend of a guy that was in the plywood pit, and I thought he had all the answers. And I got onto a trade there that I thought was really going to make me rich, and I dropped like 30 grand in one day. These are the days I was making like 30 grand a year.
Yeah.
And I dropped $30,000 in one day. And I'll never forget. I come home and I see my wife is sitting at the dining room table cutting out coupons to save 15 cents on a pound of wieners.
Right.
And I never did tell her about that.
Okay.
But but I somehow recovered from that. I started trading small again. As with Stotler, I was able to trade without margin, and so I kept coming back, and 18 months later, I blew up again when I got into the worst trade in the history of commodities: short pork bellies and long hogs, which was an idea from the guy that ultimately was the one that blew up Stotler.
Okay.
But anyway,
my God, well, you've been through it,
oh yeah, I left out Feb '74 when I shorted one contract of silver and got killed.
Okay, so let me ask you this.
So
What
I see
turned
this
it
pattern.
around?
Okay,
What turned it around?
I got suicidal. I mean, one of those times, I remember taking my car, measuring out, and figured out how hard I had to hit this abutment to make it look like an accident, so my family would get the life insurance. That's how despondent I was.
Okay.
And I was going to kill myself. But somehow I didn't, and I recovered. But I kept blowing up like every 18 months for like 3 or 4 or 5 years. And fortunately, I was able to make a living because I was in the brokerage business, and because I was an analyst. And I always was better at figuring out the market than I was trading it. And that is the case to this day. I mean, one of my biggest clients said to me, "You just analyze the markets. I'll do the trading and I'll take care of you. Don't worry about it." And so I've always had a tendency to be much more of an analyst than I am a trader, and I'm a lousy trader to this day. And I mean, now I'll put, when I think something's big is happening, I'll put something on small and forget about it. That type of trading is about the only kind of thing that I do these days.
Well, I'm so blown away by the transparency and authenticity of your story. I mean, a lot of people would have a hard time saying that, and that you're still in the game, and and that you discovered that you're a better analyst and trader. I can relate. And many times I'm much better at calling the market. My shortcoming is always, not riding to targets. And, the blowups happened when I was stubborn and averaging out and all of that. And what a great story. So you know what? You don't have to trade for us either. But I'm interested in your analysis. And, we're looking at the dollar chart. And Friday, we took out the previous high, looked like a stop hunt. instead of a breakout, and now it looks like we're challenging that uptrend line. You think the high for now may be in, or could there be one more push before we head down?
Well, that's exactly the question, and I don't know. I know that we stopped, so we made a new high there by one tick in that cash dollar index.
Yeah, they picked.
And it was
I
the
had
1, 2, 3,
two. I
6
had two. Yeah.
Okay, it was 1, 2, 3, 6 expansion, which is a classic B wave. However, B waves are usually spikes, and this isn't a spike, and they usually reverse, and you know it. And so I'm suspicious of this. And if you look at this possibility, what I have here, this alternative idea here, this is another way this could happen. This triangle could have been, we could have had, there's your 3 waves down A, and it's not unusual. It's actually more common to see a B wave be about 1382 times A, which is up here. 97 to 70. Let me see. What is that? 98. My eyes are not.
Yeah, around 99. Around 99.
98. Well, 9820 is 1382. 99 is 1618.
All right, got it.
Yeah.
All right.
So anyway, so what we might have here is an initial zigzag, a triangle X, and then this might have just been like A of another one more zigzag, kind of a little wedge A. Do this as long as we hold this low on this pullback, and then have one more leg up, and then that will be your B. And then if you get a reversal, then you look out.
Yeah.
But
yeah, I see the possibility for both as well. So, right now a lot of people are trying to get front run the Fed a little bit, thinking, they're going to raise rates or not raise rates. And even if they do, they'll be dovish because of what's happening in equities. So a lot of people are shorting the dollar here. We'll see if they're right. I don't know. Go ahead.
Yes, go ahead. Well, I mean, you guys, I know that you guys are traders and you're short-term oriented, but I always start with everything with the big picture.
And is that the daily, the weekly, or the monthly for you?
Does this answer your question?
Sure it does. I knew this would be a great interview. All right. Okay.
So here's my big picture on the dollar. It's in a major bear market.
Right.
When we went down in a corrective fashion, we went up in a corrective fashion, we went down again, and then when this, I called this high almost to the tick because I was looking for the most classic fourth wave in an ending diagonal, which is 786 of the second wave. And so I have a 3-wave rally, an A, B, and a 1, 2, 3, 4, 5, C, and I get a reversal, and I say, hey boys, I mean, this could be headed way down here, but it's not going to go there in a straight line. And so my long-term idea is that the dollar actually is in a bear market, and it started way back here, but it's down to a nominally new low. So with that, then I look, here's your first 5 waves down. Here's where we're looking for a worthwhile correction. Now this thing I thought this was 5 to here.
Right.
So we know that initial 5 waves is never the end of a move. So I'm thinking, well, we need a down and an up, but it didn't, come down as much as a B wave normally would. You're going to retrace half or more.
Would have been, 92 neighborhood.
Yeah. So instead, we just got this little, and I said, okay, it's probably A of an expanded flat. And so now I'm looking for that B. So that's why that's what brings all this about.
Okay.
And, anyway, so that.
All right, great. I really thank you for sharing both, your short-term potential scenarios and long-term. That was a beautiful chart of the dollar. I see you have. I don't know what you have. Do you have a view on? Is the S&P? Is this a 4? Even if we still flush a correction where we still haven't completed the bull market, and even though this is so painful, it could be corrected.
Yeah, let me get over here to this is the page I hang out on all day, but I think yesterday was significant with that. I know you showed earlier that we had virtually a double bottom with the Feb low in the cash S&P. But it did take out that Feb low, and I think if there was a bullish case to be made, it probably required holding that Feb low.
Okay.
And the fact that we didn't probably means that we're not going to see a new high in the S&P. However, we didn't make a new low in the Dow. Or the March low, I should say. from its third wave low. We had 3 waves down. We had an A, a flat B, and a wedge C. And then this is what has driven me crazy ever since, is that this is not a 5th wave from here to here. This is a corrective type movement. In fact, it counts best as a double zigzag in the Dow. ABC, flat X, ABC. Well, what's the most common first wave in an ending diagonal? It's a double zigzag. So, and then when it comes down here, and then when it came to this low in 3 and did a 786 retrace, man, I was absolutely confident. We're going right up to new highs, but we did another 3-wave rally. And it kind of looked like, and then I'm going, what in the world is going on? So this is the last vestige of the bullishness that I can see right here in the Dow. The fact that we held this low, we have what could be an A, a flat B, and a wedge C. Again here, this could be a 2, actually in an ending diagonal. And you could actually see 2 more probes to nominal new highs in the Dow that it will take months and months before we have the final top.
Okay, so if we get a low here, you do anything with time? You do cycle work. If we do bottom out here, and there is a shot for a new high, and maybe the Dow and NASDAQ, I don't think took out their lows from early in the year.
That is correct.
Okay. Could it be like, I also pay attention to the change of seasons, and here we are, winter's the 21st, the solstice, that maybe we have a rally into the spring. Do you still do cycle work, and is that what it's saying to you?
Yes, I do. Here's one thing. Here's another way of looking at the NASDAQ. If we had a running flat here and we're starting down, there's still a possibility of a gigantic rally back up here if this turns into a flat. In other words, if this was an A and a B, look at where yesterday's low goes. That's a 132 extension of that rally.
Yeah.
And so that would say you could come clear back up in here, and that's when the Dow could make a new high even. But here, let me show you on this page. Yes, I've got 2 things on cycles that I think are relevant.
Yeah, I saw you had a wheat chart back there. You still trade grains because you can't eat gold, and I'm sure you've heard that before. And I think grains are also great technical markets. And
yes,
also,
I agree.
I follow the Chinese, and they've been stockpiling wheat like there's no tomorrow, and now they're coming into the corn market, and we have an El Nino, and if the dollar is going to weaken, there's probably a great case for a bull market or a hell of a bear market rally coming in grains next year.
Okay, I'll give you next year. Short term, I don't think any of them have bottomed yet.
Okay.
I mean, I think wheat, corn, and beans have all got lower lows to make.
One more low.
Yes.
I use 3 drive formations. Remember J.R. Hill?
Yes.
From the 70s. Okay, so he opened my eyes to 3 drives, which tie in with,
1, 3, and 5 of Elliott. Sure.
Yeah, ending diagonals, RSI divergence, etc.
Yes.
So okay, one more low in grains.
I think so.
Okay, one more low in gold.
Let me show you gold, but first here's 2 things on cycles on stocks.
Okay.
Here's the weekly S&P.
Right, we're right on it.
We're right on it. This is not my imagination. I mean, there you can see the acceleration of the double cycle here, kind of. It goes back at least into 09. This was the 09 low. We had a low on either side of it, of the 74-week cycle. So it's not always precise, but sometimes it is. And here we are. That's the only time we seem to get this oversold is when we're making this cycle, one of these cycle lows. And that is, I thought, interesting that that's nominally due this week. In addition, I think I just happened to notice by accident, because it got so doggone many charts at so many different places. But yesterday I noticed, let's see, I said, if this is bottoming,
take your time.
Yes, take your time, Pete.
Maybe it's under charts for interview.
It's under DJIA. That's all I'm looking for.
Okay.
There it is, right there. Too many charts. Okay. They're back in the 80s, late 80s and through the mid 90s. There was only one cycle that mattered, in the stock market, and it was about the 9-month cycle, 39 weeks. And that cycle, my opinion on cycles is that they do not change, that whatever causes them is exact. And
they can invert though, can't they?
They can invert absolutely perfectly.
Okay.
Or they can come and go, that, and when they go away, when they come back, they're usually right in lockstep with where they used to be.
Okay.
And so let me just get this page is loading here. Yeah, you want to talk long-term wave counts now. There's a long-term wave count. This is the case for the big one in the Dow. In other words, some people, including my good friend Robert Prechter, call this a fourth wave. When did you ever see a fourth wave that retraced 75% of preceding advance?
Yeah.
So that was a second wave, in my opinion. Well,
I used to be influenced by him.
Yes. Well, anyway, he's got a quote. He hates he hates when I say this, I should say.
All right.
But he has a quote that I always used to use, and he gave in an interview, and it says, he's talking about Elliott Wave, and he says, much of the time, no useful conclusion can be reached. And my goodness, is that true? But, they can't say that when they're selling a service for Elliott Wave for everything every day, that,
Right.
They've got an opinion of everything all the time and whatever. But anyway, that is true. Much of the time, no useful conclusion can be reached. But some of the time, boy, can you reach a useful conclusion. And so, I always say some of the time.
It's just hard for people to wait.
Yes, it is.
To wait.
Yes, you try to force things.
Right.
And this is on a weekly.
God, you know what, Peter? You should be a teacher. Because
yes, well, I was a professor
people?
for a while. Yes.
Okay, because you have so many teachable moments in this, 30 minutes we've been together.
Here's the 39-week cycle.
Okay, right
Look
there.
where it is.
Yeah.
I mean, this used to be the only, so you can see it's kind of gone away. But look at the last two lows, or well, we don't know for sure that this is a low yet, but
right.
I think odds are favoring that it could be.
Okay.
And there's a lot of ways that we can see a rally. I mean, this is a really bearish interpretation of here's your high. If it's a 1-2-1-2, well, then we should have kept going down yesterday. We shouldn't have stopped where we stopped. And
let me ask you this before we broke out of this formation. We had a couple of very sharp, you could call them bear market rallies. Are wave ones always that choppy? Because I had a very hard time sitting. I was, had some bearish ETFs near at the high, but after the first break, even when I would sell a rally or buy those cheaper, I had such a difficult time sitting through this wave and trading myself out of it.
I have always said we ought to have a new formation in Elliott, and we ought to call it the Blob One.
Okay,
because very often that's the purpose. The purpose of the market is to convince you that it's not what it is.
Yeah.
And so often you've seen an initial move start in a nondescript fashion, and that you can hardly even rationalize that was any kind of a first wave. But at the same time, when you're not getting a decent impulse coming off of a formation that you think you should have one, well then you should question that. Now, if you look at the transports, they had a high, and this is also not pretty, but at least it came down in a wedge. It had a little rally, and then it went straight down, and it rallied in a 3, and it collapsed again. But even this kind of looks like a 1, 2, 3, 4, 5. That this might be ready for a bounce.
Okay. So I love that. Yeah. The purpose of the market is to convince you that it's something different.
That's exactly right. It's always trying to shake you out.
Right.
It's you against the market.
Okay. And all right, so we're still on the Dow here.
Okay. Yeah, this is here. This is.
You want to, for selfish reasons, you want to give me your look on gold?
Absolutely. Let me find my gold stuff here.
Because I was looking for lows into the end of the year, and you know, I caught a little piece of it, and the gold
Well,
shares.
there's been a nice 6-month and annual cycle that we've been having lows around the end of the year.
Yeah.
Uh,
Okay.
but you notice that this has taken off ahead of that,
Right.
and I think that's telling us something.
What do you think it's telling us? That it's
Well,
good?
here's two possibilities. Okay, I mean, I always
Right.
have two possibilities.
always an alternate.
Yeah, who said you know they like one-handed economists. They always say on the other hand, you know.
Yeah. Oh, right.
I always say, give me a one-handed economist that only has one idea instead.
Yeah.
But you know, a friend of mine once developed a mathematical program to count Elliott waves, and it was an expert system. It was based on rules and on how well the market confirmed the rules. It would come up with wave counts, and literally it would come up with thousands of wave counts and rank them according to how they followed the rules. He did not consider it a successful analysis if it didn't have both bullish and bearish wave counts. And so, I mean, there's always, I mean, it's not pretty always, but there's always two ways of looking at things.
Yes.
And at least two ways. And of course, you know that from being a currency cross trader, what works, you know, one direction has got to be the opposite the other direction. Okay, let's look at the big picture here on the monthly chart.
So while Peter's getting his chart, I encourage everyone to follow him on Twitter, and it's at FIBO SR. So it's Fib FIBBO SR for Peter.
Correct.
Okay.
Here's my preferred wave count in gold. This is the long-term picture. We completed after the spike in 80.
Yeah.
We did a corrective movement to here. This is a very bullish. In fact, here's the most bullish pattern in Elliott of an ending diagonal that ends with a failure or a truncated fifth wave.
Okay.
And write it down. I mean, that is the most bullish, and the opposite. If when it makes it the other way,
Bitcoin might be doing that right now. But anyway,
well, we made we did have a little possible ending diagonal. I'll show you Bitcoin futures anyway. I'm a futures guy. I mean, I do all the currencies, but I do them from futures. Only the ones that have futures. So I'm backwards to most of you guys that do currencies.
Right.
But anyway, here's your allegedly a super cycle fourth wave. We should have gotten 5 waves up, but we didn't. We got 3. So when you're looking for a 5 and you're in a fifth wave position, you only get a 3, then the first thing that should come to mind is this might be an ending diagonal, believe it or not.
All right.
And so this might be only the first wave of an ending diagonal that is the ultimate demise of the dollar, you know.
Right.
So anyway, we've come down there with an initial zigzag, a wave X, classic, and another possible A, triangle BC. This could be a major bottom right here. Right. And here was your 2 years ago low that was due in Feb 17. We've kind of oscillated right across it.
Yeah.
So now that's going up for
we got a higher low there.
Yes. And so here's a 1 ABC flat 2, 1 ABC flat 2. We could be on our way from the existing low. On the other hand,
okay,
I still think even this is bullish in short term, because let's say that we're going to do a double 3 where you have an ABCX, ABC. This would actually be a triple 3. And then here's what we might be trying to do is tack a triangle on the end of this mess. And you know, there's been no impulsive moves really that were clean in anything, in either direction, I should say.
Right.
And that's why I come up with this double 3 idea, which serves me well so many times. And that says what we might be doing is, we're not yet ready to take off, like you said, that we have to go up and come back down one more time, and then we'll have the lift off. And now that's what I call the alternative count. If you look at the short term of that, here's what it looks like. Here was the A, the B, the C. Now we need a D. We did an initial 3-wave rally. We did 3 waves down. And now I think we're doing another 3-wave rally, of which we got 1, 2, 3. Go back down to the hourly. Here's the ABC. Here's the X. We're working A. We got 1, 2, 3, A triangle BC. This could be 4, but there's no real alternation here.
Mm-hmm.
This is kind of a zig and this is a zig. So what's more likely is that this is A of a triangle 4. This could already be B, or we could go up like 1, 3, 8, 2 times this.
Yeah.
And then do your triangle, then pop it. Then that'll be the A. We're going to need a B and a C. And we might end up with a high when we thought we were going to have a low. But, that high could be as high as ultimately here before we come back on down. Wave D typically would be 618 to 786 of wave B. That's why I'm looking for a rally up to here from this low.
Okay. And do you see any possible scenario that, like, if you showed the dollar that we saw been spiked and we could spike, where gold could come back down towards the 1120 low, not the 1050 low, and then put in a bottom? That would mean taking that would retrace back to where you had C, I think was 1120.
1167 was my C here.
Okay, that was
Gold.
C. So I'm talking further back, 1124. You have it marked as the end of 5 or all the way back there.
Way back down in here, or wait a minute, this one.
Yeah, there.
Last year's or 2 years ago low.
Yeah, so could we go back and check 1120 before all this happens if the dollar spikes up to 100, 102? That's the only catalyst I could see for
the only way here's how that could work. I guess we could say this ABC was an A and this was a B, and we're still a C that would take that out.
Okay.
But, then this has got to be a 1 and this 2, and then you're going to need a 3, 4, 5 and still hold this probably.
Okay. All right.
It's unlikely, I think.
Okay. Peter, what really an excellent interview. I really appreciate you being here, and great story. Thank you for, really bearing your journey and what you've been through, because it gives people hope that, just because you fail doesn't mean it's over. That,
man.
What?
Yes.
Yeah.
And you failed again and you failed again.
Yeah.
Right.
People that try and sell the secret to trading, you have the secret to being in the markets. The secret is there is no secret.
Yes.
It's hard work, and it's perseverance and living through adversity. That's the secret.
That's right.
And you're a living example of someone who's done that. I tip my hat to you. And like it or not, Peter, you're now my trading warrior brother.
Okay.
And I'm going to be following you. And you don't have any kind of service, do you? Because
no, I do not. I do not. I just don't want to pin myself down to an absolute schedule.
Yeah.
That's my problem.
So that's a big advantage of us Mavericks, why we got into the business.
Yes.
So that we can have freedom. It's not.
Well,
just
yeah. I mean, I've got individual clients that I work with that.
Right.
Even they know that sometimes I'm not going to answer the phone.
Okay. Thank you for answering my tweet.
All right.
And
that's
with
been
that,
my pleasure. Thank you for having me on, Dale. I appreciate it.
All right, Peter. Merry Christmas and Happy New Year to you, buddy.
Thank you very much.
All right, everyone. That's a wrap up for Turnaround Tuesday. See everyone tomorrow. What a great interview, in my humble, extremely accurate and humble opinion. Hammett says, thank you, Peter. And Martin, you have his handle again is at Fibbo, Fibbo, SR. And we'll see everyone tomorrow. Good hunting, Fed day tomorrow. So I'm sitting on my hands. Hold on a second. And please take my mouse away from me and put it in the wall safe until after the Fed. Oh, okay. My wife has hidden the mouse for me. So good hunting, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Adios. Thanks again, Peter.